Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, June 7th, and we are now in the last hour of the trading day and the last hour of the trading week. So boy, what a day it's been again. Another nice up day. Um, uh, just to make sure everyone can hear me, would you guys just let me know, just to check in and let me know that you can hear me okay and everything's going okay? All right. So, boy, what a day. So, we'll get to the charts and my positions in just a second. Um, So the format for today, as usual, is that we are going to first run the U.S. legal disclaimer, and then we're going to get on to my current positions, when I bought them, why I bought them, and how I'm going to manage things going forward. Then we are going to take a look through my watch list. We're going to go through each stock in my watch list, and we're going to see from a technical perspective if there are any interesting entries for the end of the day. And then after the market closes, we are going to do a little question and answer. So if anyone has any questions when we're done, please let me know. I'd be happy to take a look at that. And then I did want to mention, the reason that I do trade in the last hour of the day is that I feel that the prices that are closest to the close are the most valid prices of the day. So those are the best prices for me to make my buying and selling decisions. The prices during the day, intraday, can just tend to be a lot of noise. So I feel like the professional and the smart money make their decisions at the end of the day, and that's why I also make my decisions at the end of the day. So, hey Andy, good to see you, my friend. Seems too easy on a day like this. Yeah, sometimes it just seems easy, and just sitting on your hands is, you make the most money. But obviously, it's not always like this. It doesn't always go down. It doesn't always go up. So you have to put yourself in a position to capitalize if you do have a good move like this, which we have. But don't get complacent. Don't think that this is what the future is going to bring, because you never know. So don't get too euphoric when things start moving up like this, and then don't get too down when you have a down move, or a week or two or three or a month like May. So it's always important to be even keeled, and just take the positions when the market gives them to you, or don't take them when the market does not give them to you. And then position size correctly, all that stuff that I talk about, but position sizing is so important, everyone. Mount Dulgy, hey, how you doing, my friend? What a great day to end a great week. Yeah, this has been a monster week. Holy smokes, this has been a monster week, and thank goodness, right? We needed it after May. So, okay, so let's quickly get the legal disclaimer out of the way, and I will be back in 40 seconds. So hang tight, please.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, well, we got that out of the way, and let's get to the charts and see what's happening. All right, first of all, let's go with Amazon in alphabetical order. So I did buy Amazon here yesterday on June 6th when it closed back above the 200-day moving average. It closed under then it closed back over. And when you have a close under and a close back over on Amazon, it's a good quantified long-term trading approach, profitable trading approach. So I did not enter this trade, Amazon, as a long-term trend trade. I am categorizing this as a discretionary trade. If this was a long-term trend trade, I would just hold this as long as it was above the 200, and then I would get out when it closed below. I, of course, would phase out as I normally do, but because we came from a lower low up into this 200, over the 200-day moving average, I did take a half position, because I always take a half position if we come from a lower low back over my entry signal. And then, so in this case, I am going to be targeting the 50 RSI as my initial profit target. That's the blue line up there at 1818. If it closed above there today, I would keep it, and this is my secondary profit target up here. But today, if it actually got to the blue line and then closed back under, that would be my signal to take the trade, because it is a discretionary trade. Trend trade is I'm holding this thing as long as it stays above the 200, and when it closes below, I'm just getting out, but I'm phasing. So this is categorized as a discretionary trade. So hit 2 profit targets for me today already, which is nice. It's always a good sign when you take a trade and it immediately goes your way. If you take a trade and all of a sudden it just flounders, it's not really a good sign. The best trades you have are the ones that when you buy, they take off immediately. So, but that's the reason we bought it. It closed under the 200-day and then over the 200-day. You know, there are a lot of buyers and sellers of the 200-day. If it can hold above the 200-day, they will hold it. If it closes under, they will sell it. So that's kind of the line in the sand, especially on a big cap stock like Amazon. So great day, up 2.63%, and we'll see where it closes. DDM. Okay, so opposite of Amazon, I did buy the DDM, which is the double leveraged Dow. I did buy it yesterday when we had a close back above the 200-day. It also came from a lower low. You see how this low is lower than this low? Closed back above. MACD went positive, lots of good signals. So going forward on this trade, this is a trend trade for me. I will hold this as long as it holds above the 200-day moving average. I will continue to phase out on the way up. You can see I did hit 2 profit targets today. So I'm not going to manage this trade based upon what did it do with the 50 RSI, so forth and so on. This is just a long-term trade. I'll continue to phase as it moves up my way until I'm either 1, completely out of my position, or 2, closes back below the 200-day moving average. So that is the plan on DDM. 2 profit targets today, which is really great. Disney. I did buy Disney back here on the 3rd of June. And why did I buy it? And you know, this is a really good pattern that I'd really like you to instill into your brain. Geez, sorry. So during the month of May, from here to here, the market really went down strong, right? But Disney moved sidewards. It was stronger than the market. So the relative strength of Disney was strong. So that caught my eye. And I like to see stocks that are holding up better than the market, because if the market does turn, those are the ones that tend to really move up strongly. So I did buy it here on the 3rd of June. And why did I buy it? Well, we had a V2 trigger, and a V2 trigger composes of 3 bars. Day 1, day 2 goes below day 1. Day 3's close closes above day 1's close. And in addition to that, you see the green line here. This is the first ATR channel. This is the +1 ATR channel. This is the -1 ATR channel. In addition to the stock being stronger than the market, in addition to the V2 entry, we also went below the -1 ATR channel and closed back above. That is also a really good sign. So we bought it here 132.32 back on the 3rd, and you can see it's just rocketed our way the entire time. I have been phasing out, hit one profit target today. It got extremely close to the 50 RSI today, to the upside. And that was my initial profit target, is the 50 RSI. And the 50 RSI just happens to dovetail with the 3rd ATR channel. And, 88 to 92% of all prices stay within the 3rd ATR channel. And what I mean by that is, here's the -3 ATR channel, here's the +3 ATR channel. 88 to 92% of all prices stay within here. So when you start getting up to the 3rd ATR channel or the -3rd ATR channel, you're kind of testing your luck a little bit. I mean, it doesn't mean that it cannot go up here. It certainly can. But from a statistical standpoint, more often than not, it does not. So with that being said, it literally within a few little ticks here missed the 50 RSI and stopped right at the 3rd ATR channel. So unless this closes and a 70 RSI as well. Sorry, I said 50 RSI. Didn't mean that. I meant 70 RSI. I think this has run its course. If it closes above the 70 RSI, I will continue to hold it. But if not, I'm going to go ahead and just lock in the profit on that trade. But that was a monster trade. From here to here, 4.39%. It was a really good trade. So if it closes under the 70 RSI, I'm going to go ahead and just lock in the position. All right, Intel. Why did I buy Intel? I bought it back here on the 29th of May. The reason I bought it was the previous day before went under the 30 RSI and under the 3rd ATR channel. And the next day, the day that I bought it at the close, it went both from under 30 and closed over 30 RSI. And the day before was under the 3rd ATR channel and closed back above the 3rd ATR channel. So that was my signal. My initial profit target on this is a 50 RSI. I'm not thinking that just because this happened here that this is the bottom of all time, right? This is just a snapback trade where I'm buying around the 30 RSI and targeting the 50 RSI. So as we've gone forward, I think I hit a profit target here. I hit a couple here. Can't remember if I hit one here. I definitely hit 1 or 2 yesterday, and you can see I've hit 2 today. So we're at a 47.67 RSI. My initial profit target is a test of the 50 RSI above us. And then my ultimate profit target is a 200-day moving average. So hit 2 profit targets today, one right at the top. So moving forward, it's moved so far from my entry here. I'm not going to let it come all the way back to the entry. So probably a close going forward. If I have a close under the previous day's low, like tomorrow, Monday, if it closed under today's low, I would use that to lock in profits. If it keeps moving and then one day in the future closes below the bar just previous to it, I will also go ahead and lock in profits. Or if it closes above the 50, if it goes above the 50 and below the 50, that will also be my signal to get out of the trade. But this has been a really nice trade. Very, very happy with it. All right, so here's 3M. Why did I buy 3M? Well, a couple reasons. We did make a low here. We rallied a bit. We came back down. MACD bar stayed stayed green. This is not an ideal double bottom with the divergence, but it was one of the reasons that it did catch my eye. But we had very deep red MACD histogram bars here. And then here we made a lower low, but no red bars. That was one one indication that things might be looking pretty good. Then we were under 30 RSI. The 4th of June, we went from under the 30 back over the 30. We went under the third ATR channel, back over the third ATR channel. I decided not to buy it that day. I felt like, I might get a little better price in the subsequent days, and I did. So what I said was, if it keeps going, oh well, I missed it. But if it comes back, contests the halfway mark of this big bar that we had, and it closed above the halfway point and I got a better price than the previous day, I would buy it. So I did buy it back on the 5th of June at 163.54. Yesterday it did move up. We hit a profit target or two, probably one. I can't remember now. But we at least hit one, I know that. And then today we have hit another profit target right here at 166.09. It's potential that we could hit another profit target. It's a limit order in the system right now. But how do I manage this trade moving forward? Well, to the upside, if we test the 50-day moving average and it fails, I will take profit there, continue to phase out up to that point. If it holds above here, then my secondary profit target is here, the third ATR channel. To the downside, probably a close below the 10-day moving average at this point would be the most likely place to go ahead and just exit the trade. But even if it does close under here, I'll still have a nice profit on the trade because I have phased out. If it continues to move higher, then I will use a close below the previous day's low. If we get up here to the 20-day moving average and close above, I will then use that as my trailing stop. So, when you first enter something, you have to identify where your initial stop's going to be. As it starts to move up, then use faster moving averages or other methods to lock in the trade if it starts moving against you. Don't let it go all the way back down to your entry point. So anyway, so 3M, I'm targeting the 50 RSI initially. If it goes above, closes below, I will lock in profits there. If tomorrow or Monday we close below the 10-day, I will go ahead and just lock that in. And if it's somewhere in the middle, then I will just use a close below the previous day's low. Or if it gets above the 20-day moving average and then closes back below, I will also take the profits there. So that looks nice as well. All right, so Qs. This is a trend trade. This is not a discretionary trade. So I did buy the Qs on June 4th. Why did I buy it? Well, the previous day we went below the 250. I based this off of the 250. We closed below the 250 and the 200, and then we closed back above. This is a good long-term back-tested system. Let me just show you. So this was based on the 250-day. So, this is from etfreplay.com. I'm using this by permission, but I really like this site. I use this all the time. But, here's the back test. QQQs from 2000. And the parameters are, if it closes under the 250 and then closes back above the 250, that's your entry. You hold it until it closes back above the 250, and that's when you exit. So you can see the results of that approach. 312.6% return. If you would have just been buying and holding, just not doing anything, but just buying and holding, it would have only returned 152.9. So twice as much. But the interesting part here is the drawdown. Using this approach, above the 250 you're in, below the 250 you're out, your maximum drawdown would have only been 28.4%. And with buying and holding, you would have had a maximum drawdown of 83%. So using the approach, 312.6 on the return, 28.4 on the drawdown. The buy and hold approach, 152.9, and an 83% drawdown. So you can see it's a good back-tested approach. The winning percentage is not that high, only 26% winning percentage and a 73% losing percentage, but your median win when you do win is 10.38%, and when you lose, it's 1.4%. So it's almost a 5-to-1 risk to reward. So a 5-to-1 risk to reward with a 26% win rate, still very profitable, as you can see. And if you look at some of the returns, the greens are usually going to be big and the reds are going to be small. Pretty small, 2-3%. Here we have a 35%er. Here we have a 16%er. Here we have a 19%er. Here we have a 62%er. 62%er pays for a lot of ones and 0.2s and negative ones. So, the winning percentage is not important in trading. It's how much you win when you win and how much you lose when you lose. So, okay, with that being said, that is why I did buy it, right? That's the approach. Close under the 250, back over the 250. I will just continue to hold this. I will continue to phase out on the way up unless two things happen. One, we close back below the 250, or if we get up into the 70 RSI range and it fails the 70 RSI range, that would also be an appropriate place for me to go ahead and lock in profits. So this has been a really nice trade. Percentage wise, 3.6%. It's pretty dang good on an index. Going forward, we'll hold this over the 250 and get out if it closes under the 250 and continue to phase out. Okay, SPY. So I did buy SPY. I bought 2 positions of SPY for 2 different reasons. So first of all, in case we have some new listeners today, I do buy the SPY every day, the SPY every day at the end of the market, and I sell it first thing in the morning. And why do I do that? It's based upon this study, but since 1993, if you would have bought the SPY on the open and sold on the close each day from 1993, you would have actually lost 5.2%. But if you did the opposite and you bought on the close each day and sold on the opening the next day, you would have returned 568%. Unbelievable, right? I mean, just the difference between buying in the morning, selling in the afternoon, compared to buying in the afternoon, selling in the morning. And the green line here is the buying in the afternoon, selling in the morning, and the red line is the opposite, buying in the morning, selling in the afternoon. So you can see it's not even close. I mean, this is very, very clear that buying in the afternoon, selling in the morning is the better approach. So with that said, it still does have drawdowns. As with any trading approach, you're always going to have drawdowns. So the important part is that you position size correctly. If you position size too high, let's say you started here and you use large position sizes, this would have beat you up in a big way, and you may have not had money left in your account to continue. So you have to take the long-term approach, use small percentage sizes. I use a 10% position size, which, no matter how bad things get, it really won't beat me up that much. So this is a long-term approach for me. And so I did buy SPY. I have been buying SPY each day at the close, selling on the open. You can see the last 4 days, I bought here, sold here, bought here, sold here, bought here, sold there. Today, yesterday, bought here, sold there. So, and I will be buying that again at the end of the day because I do it every day. Now, the second position I took on SPY was back here on the 3rd of June. And why did I take it? Well, for 2 reasons. One, the price went under the 30 RSI intraday and closed back above the 30 intraday. I'm sorry, at the close of the market. So it went under 30, that closed back over 30. That is one requirement I have. And the second requirement I had is that intraday it went under the 3rd ATR channel and then closed back up. So I entered here at 274.44. My initial stop would have been just to close below 30, maybe just right back down here. It's giving me a small risk, but you can see the reward was really great. So I have been phasing all the way out, bump, 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 all the way up. You can see I hit 2 profit targets today. It's at a 57.43 RSI. Thing is I am almost out of shares. I think I only have 15% of my position size left. It did close above the 50-day moving average. MACD did go positive. My trading partner asked me, is this something that you would buy above the 50 RSI and the 50-day moving average? Possibly, but I don't think I'm going to. I think we're going to have some resistance up here at the third ATR channel. My initial stop would be a close below the 50 if I did that. But unless this closes above this previous high here, I'm going to go ahead and just take off the remaining shares just to free up some room, consolidate a little bit. This has been a monster trade so far. It's been almost a 5% trade on the SPY, which is amazing. So, it's important, these things going up, not to be greedy, not to have this fear of missing out. There's a lot of people right here that have a fear of missing out. And, the market was really depressed down here. Now it's starting to get euphoric. And, be careful when everyone's getting euphoric. I mean, take your signals, do it, follow your plan, but I am out of a large percentage of this. So unless this closes above this previous range here, I'm going to go ahead and just lock in that super nice gain. Mount Doji says, I wish I got into the Q trade. I totally didn't catch that back test. Oh, bummer. Dang, man. Yeah, that was, it's been really good trade. It's been really good trade, but it's okay. It's important not to chase trades. If you're 2-3 days late to the party, look for something that, offers a better risk to reward ratio. Okay. So Square. All right. I did buy Square here on, the 4th of June. And why did I buy it? Well, for a couple reasons. First of all, see this low over here? We had a low, we had a nice rally, then we came back down, we made a lower low. But you see the MACD line? See how shallow these MACD lines are compared to how deep they were here? The MACD histograms, the red lines. So this is considered a double bottom with a bullish divergence. I studied one-on-one with Dr. Alexander Elder. This is his favorite technical setup. And so you want to look for a low, a rally. You want to see a equal to or lower low, but the MACD readings on that second low have to be more shallow than the first. And when I mean more shallow, the more shallow, the better. But at the very least, they can't be more than halfway of the previous bars. So halfway of this bar would be here. So, I mean, it would still be valid if it came down to here, but you can obviously tell this is not close to halfway of this over here. So, so the general setup looked good, but you still need a trigger once you find the setup. And what was my trigger? Well, the trigger was that we poked our head down one day, immediately reversed back up, went from this old range back into the new range, closed above that previous low, closed back into the 1 ATR channel. I felt like that was a good risk to reward. And as you can see, it just took off. I have been phasing. It's at a 56.29 RSI now. So it is holding above the 50 RSI. My ultimate profit target on this one was the 50-day downward sloping 50-day moving average. So if I will continue to hold this unless we test that 50 and fail. And if it closes back above with the remaining shares I have, I'll just continue phase out probably to the 100. So again, going forward, if we go above the 50 and below, that will be my signal to lock in the profits. If we close below the 50 RSI, that will also be my signal to lock in profits as well. But did hit 3 profit targets today, got one very near the top, so really happy for that. All right, so real quick, just a quick recap. Amazon 47.87. If it tested the 50 today and closed below, I would get out, but hit 2 profit targets there. DDM, this is a trend following, just gonna hit 2 profit targets, just gonna keep this unless it closes back under the 200. Disney, unless it closes back above the 70, I'm going to go ahead and lock this trade in today. Intel, if it tests the 50 RSI and fails, I will lock it in, or if it closes below probably the halfway mark of this bar here, or the 5-day, I'll just have to see. 3M's going nicely, testing the 50, that's my initial profit target, or close below the 10 to the downside. The Q's close below the 200 would be my stop. SPY, if it closes above the previous high here, I will continue to keep what I have. Otherwise, I will exit it, but I will buy in the afternoon, sell in the morning trade here, and Square. Be looking for a test there. One thing I do want to point out before we start looking at the positions is what really caught my eye today. Hey, Frederick, how you doing? Yeah, don't catch FOMO, Mount Doji. FOMO, in case you guys don't know, is fear of missing out. It's a real psychological thing. Do not catch FOMO. It's like catching the flu. Just be patient. Look for a better setup that hasn't moved so much already. Dr. Jorgensen says, Square, triggered a fractal today. Better buy it again. Yeah, I don't think I'm going to buy it again. I mean, it did trigger a fractal. I don't think Bruce will know knows what that means. Well, I guess the alligator was sleeping a little bit, but I don't want to confuse everybody with the alligator right now. But nonetheless, really great trade. It's almost a 10% move, everybody. Pretty good. Okay, so what I wanted to point out was on VIX. VIX goes inverse of, generally goes inverse of the S&P, meaning that if the S&P is up, VIX is probably down. If the S&P is down, VIX is probably up. It's based upon the price of puts getting more expensive. Well, here we have a day where the Dow is up 300, the Nasdaq's up 136, and the SPY is up 35. Pretty strong day. You would imagine that the VIX would be down substantially today. I mean, look at the VIX, the big rally we've had up. Of course, the VIX goes the inverse, but look what the VIX is doing today. Even though the market is up, the VIX is going up. What does that tell you? To me, that tells me that the market, the VIX gets more expensive when puts get more expensive. Well, puts are getting more expensive at the moment. So people are anticipating that selling puts is probably a good idea here, probably because of the large run that we've had. So I hope that makes sense. It's counterintuitive, but it's showing immense relative strength, because this should be going down when the market's going up. So because it is going up, it's telling me that the people selling these puts are starting to pay more for them. And why? Well, because they think the market's going down. I'm not saying long term that the market's going down, but I'm just saying after this huge rally, I would not be surprised at all for a pullback, and other people are thinking the same thing, and that is why puts are going up. So I did go ahead and buy a position in the VIX here. It's a little bit of a hedge. See the V1 we had? We moved down. Here's day one, day two. See how day two washes out day one, and if it closes above yesterday's close, I will continue to keep it. Another thing to point out is that intraday we did go under the 1 ATR channel and reverse back up. So I felt like it was good to put a little bit of a hedge here, not just an impulsive hedge, but a hedge based upon some actual technical triggers here. So hope that makes sense. Hey, Frederick, how you doing? I am doing well, thank you. Boy, what a week, huh? This has been an amazing week. Frederick, a lot of work today. Yes, there is a lot of work today. That mean you do not trade today? Well, it depends. Let's take a look and see if there's anything that I am going to buy or sell. All right, let me check and see where we're at real quick. Whoo, boy, big day. I think this has been one of the best weeks of the entire year for me. So definitely happy about that. Apple. All right. Well, so Apple at the moment is closing above the 200-day. Buying Apple over the 200-day is a good back-tested method. Let me just show you real quick. Uh, 12,665% if you would have bought over the 200, kept it over the 200, and only sold it when it went below, with a 37.2% drawdown. Buy and hold during the same period would have only returned 5,748%, but you would have had an 81.8% drawdown. So I would say that buying and holding Apple above the 200 historically has done really well. So with that being said, if this closes above the 200-day, I will go ahead and I will enter the position. Now, we did come from a lower low back up and closing above the 200. So when that happens, my rule, my filter is that I take a 1/2 a position, not a full position. So if it closed there, I would buy it. A small close under the 200-day, I would exit the trade. And then if it did close below, went down a couple days, and then closed back above, then I would be working from a higher low over the 200-day. Then I would take a full position. But if this keeps on moving, at least I'll have half. I'm happy about that. If most of the time this does not work, in my experience, or a large majority of the time, that first break doesn't work. So if it goes down, I only lose half of what I would with the half position. So had I had a full position. So close back over the 200, I definitely will be buying a half of position. It's going to be really interesting how the market closes. One, it's the weekend. Two, there's weekly options expiration on a weekly basis today. Amazon, we know about that. Boeing. I did buy Boeing here. We had a double bottom, we had a low, we had a rally, we made a lower low. The MACD readings here were very shallow compared to the previous. It did close back up into the range. So I bought it here. I phased up to here. I only kept it for a couple days. It did keep going a little further, which is good for Boeing owners, but I didn't like that it rejected the 20-day moving average. So nothing on Boeing. Alibaba. So this 10-day moving average, the pink line, has acted as resistance for a long time, has not been able to close above it. A few days ago, we tried, closed back under. If Alibaba closes above 154.39, which is 154.39, if it closes above there, I will go ahead and buy a half position, just because here we've made a higher low. But I want to see that it's strong enough to close above here. MACD is close to going strong. So if Alibaba does close above the 10-day, I will enter it. Close below the 10-day is my exit. Initial profit target would be the 200-day moving average. So we'll watch and we'll see what that one's doing at the end of the day. Frederick says, good for you. Let's celebrate. Hey, I'm up for that. Let's do it. Dr. Jorgensen says, Trumpy may agree with Mexico unless Pelosi puts him in jail. Yes. Well, it's always entertaining with those two, isn't it? So Caterpillar, really nothing there. Canopy Growth could be interesting over the 200-day, but nothing there at the moment. Cisco, boy, that would have been a good trade yesterday. When MACD went positive, we closed back above the 50 RS, closed back above the 50-day moving average. I didn't take it just because I already had Square, I had the Qs, and I didn't want to have too much technology. I had Intel and Amazon, right? You don't want to have too many stocks that are in the same industry. It's too correlated. So anyway, nice move here. Nothing there for me. Delta Airlines had that nice strong move above the 200. It's moved up, sold off since the top though. DDM, we have that. We're just keeping that above the 200. The Dow, we bought the double leverage Dow instead of the regular Dow. So Walt Disney, I will be exiting this unless it can close back above the 70 because it essentially tested it today. And so I'm going to go ahead, lock that in. It's near the third ATR channel. Etsy had a nice move above the 100-day moving average. It is above the 50 RSI. It is MACD did go positive. It is coming from a higher low, but I think I'm going to pass on Etsy because it tested the 1 ATR channel and failed, and then we have this 50-day moving average above us. So, this wouldn't be bad, using a stop below the 100-day, if you were to enter here would not be bad. But I already have Amazon. So, this is similar online retailer. I'm just going to pass, but not bad. Sure. You have the 20-day, you have the 100-day near the halfway mark of this bar. If it closed under, I would get out, but I'm not gonna take that. Facebook, nice big strong day today, back above the 100-day moving average. I have a friend, Stephen Burns, of whom many of you know, had a great trade here, bought it here on the bounce off the 200. I would not buy it at this point. I think it's going to find some resistance here at the 10-day, but yeah, nothing for me there on Facebook. 5 below, boy, rejected that 200. Big, nice, strong day today, but it's almost a 50 RSI. I think it's going to run out of gas somewhere in this range, so nothing there. Gold up again today. We actually did buy gold here back on May 30th when we had a 520 crossover, also took out the previous high, also closed above the 50-day. MACD went positive. We went from here and we scaled out yesterday of all of our gold. So that was a beautiful trade from here to here, but I ran out of shares in my phasing, so I had to call it, and was up much higher. But yeah, that was a great trade for us, but did not get this one here today just because I was out of the trade, but that was a great trade. Google. So Google went from under 30. No, let's see. Yes. Uh-oh. What do we got? Oh, okay. Yesterday, yes. Okay. It was under 30 yesterday. So today it went from under 30 RSI, over 30 RSI. It also went from under the third ATR channel, over the 30 ATR channel. So as long as this holds above the third ATR channel and the 30 RSI, I will be buying a 1/2 position in Google today because we went under 30, over 30, under the third ATR channel, over the 30 R channel. What would be my stop? My stop will be a close under the 30 RSI or underneath the third ATR channel. My initial profit target will be a 50 RSI. So I'll be playing from 35 up to 50. But if I'm wrong, I'm playing from 30, 35 to under 30, right? So you can see I have more reward potential risk in this trade than my risk is. So I will be buying a 1/2 position today because it's under the 200-day moving average. Goldman Sachs had a nice move up, it's moving sidewards. IBB, I do like IBB, folks, and I'll tell you why. We had a low, we had a rally, we made a lower low, we had a bullish divergence, we did move up, we have gone down. Now, do you see the V2 that we have today? Here's day 1, day 2, day 3. Day 2 takes out day 1's low. Day 3 is closing above day 1's close. It is also, MACD is also positive, and we have closed above the 20-day moving average. It's at a 49.86. I'd like it a little bit better if it could close above 50, but all in all, from this double bottom with the divergence, the move up, the move down, the higher low V2, MACD positive. So I'm definitely going to buy a 1/2 position in IBB today because of all those signals. It's important that you take your signals when you have a confluence of many signals, not just one. All right, so we're going to have to hustle here. Intel we know about that. Russell is doing well. Nothing to buy there today. Coca-Cola, much higher earlier in the day, but it's given it back. Interesting, huh? So that is a kangaroo tail. That is a pin bar reversal. So this looks a little toppy to me. Lockheed Martin up today. I did buy Lockheed Martin back here on the 29th of May when we had this higher low. See this V2? This is a beautiful, here we make a higher high, we come down, we move sidewards. The day that I bought it went below and then closed back above, tested these lows, the market didn't like those prices, reversed back up, triggered a V1, and we rode it from here up to here. Got out of it yesterday. So that was a beautiful trade, up a little higher today, which is fine. You don't always have to get exactly the top, but that was like a 4.81% trade. So good for people that still hold Lockheed Martin, but we did get out of it yesterday after entering here. MasterCard. Okay, that's roaring, but nothing there. Merck, nothing there. Sorry, I'm going to run out of time. Huge day on Microsoft today, but that was good for our Qs, right? But nothing there now. Netflix closed back above the 50-day. Might be interesting, but I don't like how it got rejected, so nothing there. Nike, nice strong move above the 200, but running into some resistance there. Philip Morris did go under 30. Yesterday it was under the 30 RSI, under the third ATR channel. Today it has gone over the 30 RSI, back into the ATR channel. I will be buying a 1/2 position of Philip Morris today. PayPal, big strong day today, nothing there. QLD is the Qs. We already have the Qs here based upon the close back. Silver, boy, you know, the entry signal was here when the 5 crossed the 20, has moved up nicely, but big reversal bar today. So I do not have this. I'd like to see silver go underneath the 200 day, then go back above and enter it with a higher low beneath us. SPY, I will be buying that at the end of the day, and I will be clearing out of the rest of my position on my discretionary trade. Just to free up some room. Square, of course we have that. AT&T, nice big strong day, don't have anything there. Bonds, still strong, although at this point we already lower high. Tesla, nothing there. UNG, nothing there. Oil, did go from under 30 over 30. I was thinking about buying this yesterday, but it was under the third ATR. It went under 30 over 30, but it still was under the third ATR channel, so I didn't take it. Visa, boy, look at Visa. Unbelievable. Unbelievable. Did not have Visa, but Visa and those kind of stocks are certainly in the S&P 500, which we do have. All right. VIX, I did buy VIX today, intraday, because of that V1 entry, and that the relative strength of VIX is so strong today because it should be down and it's actually up. So I'm glad I did buy that as a little bit of a hedge. Verizon, nothing there. Energy, nothing there. Financials was up earlier, but you know, we are above the 50-day moving average. We are above the 50 RSI, which is positive. Real estate, nice move. Yeah, this is a bummer. Do you remember, everyone, where I was going to buy this at the end of the day because it closed? It was going to close over the 200. Well, at the very end, when I was looking at it, it was under. So I did not take the trade, and I was surprised to see that the closing price actually did. It must have just snuck in there in the last 10 seconds because I think we were all watching that, and it was underneath, and it somehow just boom. And then today has a huge day up. So, oh well, it happens. Sometimes that happens, but technically I was going to take this yesterday if it closed, but it snuck by me. I didn't see the close above. When I looked, it was below. So, all right. So let's take a look at the potentials here and see what we want to do. So Apple is a potential over the 189.10 range. 189.10 price, I should say. So if it closes over here, I will be buying a half position. Alibaba, currently it's under the 10-day. Oh, that changed to 35. Okay. Come on now. I can't get, okay. 154.35. All right, so if it's under here, I am not going to buy it under 154.35. Google, I will be buying Google, half position. IBB, I will be buying a half position. And Philip Morris, I will be buying a half position. And then I already did buy the VIX. So, and then, okay. So current positions, anything we have to do with current before I start adding. Amazon is fine. DDM is fine. Walt Disney, I am going to take off. I'm going to just go ahead and do that right now. Intel is fine. 3M is fine. Qs are fine. And SPY, I'm going to take that off. So let's see, we're at 257 on the Dow, so we have come off a little bit. And then Square, anything with Square? No. Well, there's going to be a lot to do here at the end of the day. Google. All right. Well, I'm going to, okay. So let me get some of these things off the table here.
Order partially filled. Order filled. Order filled.
Okay. All right, everybody. I did lock in this profit and got rid of the remaining shares on SPY. What a trade, huh? Boy, oh boy, what a trade. So that trade now is off the table. We can get our chart back to looking a little cleaner, and we will be buying the SPY at the end of the day. So thank you, SPY. Nice doing business with you. That was fantastic. Taking Disney off the table. The rejection of the 70 RSI. So Walt Disney's coming off. Qs are fine, SPYs are fine. VIX is moving. Philip Morris. I'm going to go ahead and buy 1/2 position on Philip Morris.
Order partially filled.
Okay.
Order filled.
And again, we bought that because it was below the 30 RSI, went back above, was below the third HER channel, went back above.
Order partially filled.
78.34.
Order filled.
Well, I'll tell you what, I do not want to buy Google and Apple. I do not want to buy them both at the same time. So that being said, I am going to go with the stronger, which would be Apple. Alibaba, well, it's going to be close, but currently it's under. Okay. So it looks like Apple's going to be okay. I'm buying a half a position of Apple, and that is because it is above the 200-day moving average. However, it did come from a lower low prior to it, so that is the reason why I'm only buying the half.
Order partially filled. Order filled. Order partially filled.
190.05.
Order filled.
All right. Alibaba's going to be close. Let's take a look at the weekly on IBB. Yeah, see, it's closing above the 100-day on the week, on the 100 week also. So I do like that. Yep. I do like that. It's a nice higher low, V2, back over the 20-day. MACD's positive. I'd like it a little better if it could close above the 50, but all in all, still looks good, especially because we had this prior bullish divergence here. Low, rally, lower low. Half of the readings here, move up, move down, was able to be strong enough to come back up. All right, so what I'm going to do is I'm going to buy a 1/2 position in IBB. And it's a half position because it is underneath the 200.
Order filled.
Sorry, I trade several accounts, so I have to make these repeated. That's why it takes me so long to do this, because I'm having to do it in 2 accounts, sometimes 3 accounts.
Order partially filled.
103.79.
Order filled.
Okay. So we did buy Amazon. I'm going to pass on Alibaba. We did buy IBB. Amazon looks like it's closing strongly. DDM. We got 1 minute. Disney we got out of. Boy, that was a nice trade. But it stabbed at the 70, rejected it, so that's good enough for me. Intel's doing great. 3M's doing great. Q's doing great. SPY. I did buy the SPY at the end of the day. I already bought it. Where did I buy it? 287.63. All right. and then square. We're keeping square. Boy, what an unbelievable day, everybody. Oh, and we did buy the VIX. And the VIX is in the money too, so that's fantastic. That is the market. My gosh, what a day, huh? What a week. Do you have Tesla in your list? I can put it in my list, Frederick. I do look at it occasionally. This was the buy day here when we went under 30, over 30, under the 30 HER channel, over the 30 HR channel. I didn't like it because it was like stuck right at the 10-day moving average on the 10 EMA. But it's moved up since then, but actually down a little on today. Musk must be off the weed recently. No good tweets for a while. Yeah, that's better for the stock. Mickey will be sad. We sold Disney. Yeah, we had a good time at Disneyland though, Bruce. That was a fantastic trade. We should keep mini. Hey, listen, before we get to questions and answers, if anybody has any questions about anything I did today or want me to take a look at anything else, please let me know and I will do my best to take a look. But I do want to mention that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. So if you feel like you would benefit by having me work with you one-on-one, getting together with you, learning a little bit more about you, what issues you're having with trading, what challenges you're having with trading. I could help you develop, a system, a profitable approach to fit your personality, your financial situation, your time frames, when you're available during the day. So, if you feel like that would be helpful, please let me know. My contact information and my hourly rates are in the description of this video. And I have had good success, really good success with my clients for them to really start understanding how to trade correctly. So if that's of interest to you, please let me know. Contact me with my emails in the description. And then also, if you found today's podcast or live stream or whatever we want to call it, if you found it helpful, if you're learning something, please do me a favor and hit the thumbs up button. It helps with the interaction for YouTube and helps me build the channel. So I would appreciate that. And last thing before we get to questions, I do want to throw up this here by Jesse Livermore, one of the world's most famous traders. Reminiscences of a Stock Operator was based upon Jesse Livermore, but one of the all-time best stock traders. But what he says here is, do not anticipate and move without market confirmation. Being a little late in your trade is your insurance that you are right or wrong. So does that make sense to everyone? Don't anticipate. Wait for your signals to trigger before you enter them. Yes, if you anticipate, maybe you get a little better price if it goes your way, if it confirms, but only if. But it's like having insurance. Paying a little higher for that price gives you more confirmation that the trade was right, that the market is in agreement with what you're wanting to do. So just one more time, do not anticipate and move without market confirmation. Being a little late in your trade is your insurance that you are right or wrong. So one of the best, most famous traders in the world, so we should probably listen to what he says. So again, wait for confirmation. Don't try to anticipate. Wait for a signal to take it. Wait for it to confirm, for the market to tell you that it's moving in the direction that you want it to. Mount Doji barely got an apple today. Okay, good. So you got in there. Thanks, Bruce. Yep, was a good trading week. Good work. Have a good hike. I will. Thank you very much. So Frederick sent me some charts, and let's look at them quickly. Let's see. I'm not sure what this stock is, but I believe it's a French stock. But in general, I like the look at this trade. We have this channel here. We had the trend lines. We broke out of the trend line. We made a higher low from the previous low, and then we moved up strongly. We moved up over the 20-day moving average. RSI is over the 50 reading, it looks like. So this is all positive. Now, sometimes, when you have a big move, it's okay to say, look, I'm going to take a half position. And, this is a big, strong move, big bar. But it's common that it might come back down into the halfway mark. So whenever I'm torn on this, I'm like, boy, it's a really good setup, but it's moved so far so quickly. I usually take a half position. If it keeps going up, I'm happy. If it backfills a little bit, then if it can hold the halfway of the bar, the big bar that moved up, then I can add my other half position. I get a little better price all in all. So that's the first chart he sent me. Second chart here, well, I remember we talked about this one. This was a really good setup. I mean, we moved above the 200. We had a higher low. We triggered a fractal, and look what happened the next day. Boom, right back down. It closed below halfway of this bar, and closed below the 20. So if I were in that trade, I would have gotten out. But I guess the point here, the takeaway here is no matter how good a setup looks, doesn't mean it's going to go up, right? It doesn't matter if 900 things line up. It does not mean it's going to go up. So how do you process that? Well, you process that by saying, regardless of how good it looks, I have to just take my regular position size or keep my position size small, because you never know what's going to happen. So, take a 5% position size, take a 10% position size. It's up to you, but don't take larger position size because you never know what's going to happen. All right. And then the last one that he sent me, this is kind of what I was talking about here. This in the long term definitely looks bullish. My gosh. You know what I mean? Big, strong bar, higher low, took out this high. We're above 50 RSI. But again, this one has moved pretty far, pretty fast, 8.61%. Are you chasing there? You might be a little bit. It might be going up to the previous highs up here. It might. So in this case, long term, this definitely looks bullish. If I were taking this trade, I would take a half. So if it keeps moving, I'm happy. But if it comes back down to about halfway and finds some support, then I would add my second half. Then I'd have my full position. It's a 60 RSI. It's getting a little overbought. Buying over 61, buying 62 is about the max that I'll buy an RSI at, because once you get up to 70, you're going to be knocking on the door of some resistance above you at 70. So I hope that helps, Frederick. Good idea to share POV from great trader like this. Thank you. I thought so. But you'll notice all those great traders, they don't really talk about signals per se. They talk about larger ideas, mainly having to do with emotions and psychology and fear and greed. Because trading is not hard, folks. It's simple, but it's not easy, right? I mean, you guys all know, somebody wants to go on a diet. It's pretty simple to lose weight, right? You don't eat as much. You exercise more. It's simple, but it's not easy. It's not easy to do. It's easy to say. It's not easy to do. And it's the exact same thing with trading. It's simple. You position size correctly. You get in when you're supposed to. You have the patience to let it run. You get out when you're supposed to. It all sounds, but that's like saying just eat less and exercise more. Simple to say, it's hard to do. Because just like it's hard to, when you're hungry, you want to eat more. You don't want to exercise even though you're supposed to. When you're in a position that goes against you, your human instinct is, I don't want to be wrong. I want to keep a hold of this. And if things start going up, you might get greedy and say, hey, it's going to go up a lot more. And you're just going to wait and wait for it to go up longer. And it may not. So again, trading is simple, but it's not easy. So you have to overcome your emotions, everyone. You have to have a plan. You have to stick to the plan. You have to fight yourself. Remember our little, where's our guy? Remember our guy? Now to find out who's been sabotaging your trading. If you guys know from Scooby-Doo. Oh, it's me. You are going to sabotage your trading if you don't get a plan together and you don't get the discipline together. So anyway, I harp on this all the time. I apologize, but I don't. So let's see. Does anyone else have any more questions? So let me just get rid of Frederick's charts there. We'll get rid of ETF replay. Andy, when you say you've hit, say, 2 profit targets, does that mean you've previously placed 2 good till canceled limit orders? That is correct. That is correct. Like yesterday, before I knew it was going to happen here, I knew I entered the trade. I had to place my profit target. I had to say, okay, where is going to be my profit, my ultimate profit, my first profit target and my second profit target on the trade? Well, this was my first, this was my second. I have a formula, Andy, that helps me decide how many shares I'm going to get out of at each profit target, and then I figure that out, and then I put those limit orders in. I do it at nighttime. It takes me about an hour each night to go through, figure this out, figure where my profit target is going to be, enter them in, enter in, not good till canceled, because they change every day. They're on a daily basis. So they're not good till canceled, because these are going to change each day depending how close I am to my profit target. I did a video, Andy. Let's see if I can find it. I did a video on profit targets and the math behind them. And so if you haven't watched that, I just put it in the chat. I put the chat in. I put the link to my video, how do I determine where my profit target phase out levels will be. But yes, you are correct. I do put limit orders in the previous night before, but they are not good till canceled because they change every day. Frederick says, thanks. I understand well your analyze. Half position when price makes a big move up. If RSI over 62 is no to a good setup. Yeah. In general, if it's over a 62, I'm just going to let it go. And at that point, if it keeps on going, that's, oh well, what do you do? But at that point, now I'm looking for a dip. Now I'm looking to buy that first dip. Terrific. I will catch that. Good. I hope you like it. I do plan on doing a video over the weekend where I'm going to go through each stock in the S&P 100 and analyze that and see if we can get any potential setups for next week outside of my regular watch list. I don't have time to go through 100 stocks in in the hour, so I have to stick with my main watch list. But sometimes you get good setups in stocks that you don't watch. So I will be doing that this weekend if you want to catch that. Mount Doji says, can you do the back test for Apple at the 250? Yes, I can. Oh, shoot, I shut it down here. Let me open it back up. There you go. So this is based upon the Apple 250. So buy and hold was a little better, but pretty similar. And maximum drawdown 64 compared to 81. So the 250, you can see, Mount Doji, that the 250 of Apple is not even close to the 200 of Apple, right? So just so you make sure you have those numbers. The back test 61.10, buy and hold 65.34, 65.43 and a half, maximum drawdown 64 on the back test, and maximum drawdown 81 on buy and hold. Compared to the 200-day moving average, hugely different. And I would attribute that to the fact that everyone is keying off the 200-day on Apple. Let me see here. All right. All right. So, well, what a week. We were green every day, had a really beautiful, profitable week. And so, I'm grateful for that. I'm happy with that. Go out and do something nice for somebody today. It doesn't cost anything to hold the door open or say hi or give a wave. You never know how that's going to maybe have a positive impact on someone's life just by doing a simple kindness. So anyway, I want to leave you off with that unless we have any other questions. Mount Doji says, crazy difference in 200 and 250. Really cool tool. Yes, it is. I really like ETF replay. Frederick says, do you check RSI during the day if, for example, it goes below 30 RSI and over, or you just check at the end of the day? Yeah, I do check it intraday because one of the signals that I have, Frederick, is, I want to see if something went under the 30 RSI and went under intraday and closed back over, or if it went like to the upside, profit side. If I'm targeting a 50 RSI and intraday it gets above 50, but then it closes below 50, then that's my signal. I make my decisions at the end of the day, but I do like to see what happened during the day to see if something rejected. Like, for instance, here's Amazon. The 50 RSI was at 1818. Let's just say, because this little tool helps me manipulate this. Let's say today it went above 50 and then closed below 50. Well, I make my decisions based upon the close, but I look to see what happened during the day, right? And it did go above 50 intraday and then close back below. And the same thing with DDM. We bought, oh no. Which one did we buy way down there? Oh, we did buy DDM. Boy, now I can't remember. Pretty sure we bought DDM down here. Yes, we did. We did buy that too, and then we sold it, and then we bought it again. So here, it went under 30 RSI intraday and then closed back above. So I do want to see what happened intraday. You're welcome, Andy. Hope you guys have a good weekend. And Mount Doji, I think we have basketball tonight, so I'm going to go to the gym and catch the basketball game. Should be interesting to see what happens. All right, last chance, everybody. Does anyone else have any other questions for me today? Okay. Well, hey, do me a favor, hit the thumbs up button. If you can, share this on social media. Let's help me build this channel, and let's help other people as well, because trading is a difficult game, and so I'm just trying to help people navigate it and become better traders and keep a hold of their money. So, all right, on the way out, I'm going to have to play. Mountain Doji says, going to finish up my Steve Byrne book on entries before the game. Sweet. Good books. Really good books. You too. Thanks, Mount Doji. Okay, thanks, everybody. I appreciate you coming by. And on the way out, going to have to play the legal disclaimer. So have a good weekend, and I hope to see you next Monday during the last hour of the market. Take care, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.